All right. Good morning and welcome. October 20th. I think we all survived yesterday, the anniversary of the crash of 1987. Have we survived the whole thing? Well, the question, I believe, from a contrarian standpoint and looking at a technical perspective, when we look at the 5 top stock indices here, one of the things that we will note on a weekly basis, and I'll expand these charts for you. On a weekly chart, we did have a long shadow, but as you note here, we did see that little sell-off from peak to trough came on heavy volume with on-balance volume. Now, on-balance volume and advanced decline has been out of sync for most of the year. In other words, we have seen periods where back here at the beginning of the year where we made a higher low, prices made a lower low, and the on-balance volume made a lower low. So we have pretty much the same type of situation in the Dow where the advanced decline made a higher low, meaning out of just 30 stocks, they couldn't even get back. Prices actually traded near and tested the April lows. However, the advanced decline did not get to that depth of a level. Now, traditionally, it would be a lot more bearish if, for example, we had a bearish divergence. In other words, prices made a higher high and advanced decline didn't. So with that said, we departed too far from the moving averages from a weekly basis, and we're chopping around. The key is, obviously, to hold and keep this low in the diamonds, or the Dow Jones Industrial Average, intact. So, do we have any definitive buy signals? No. Do we have strong bearish breadth analysis? No. So the diamonds chalk that one up to blue chips being still preferred. They didn't liquidate the majority of the holdings, they being funds and the marketplace. When we take a look at the NYSE definitely did take out the April low. In fact, we took out the April low and closed below the April low. That's kind of important in my analysis. And we did not form a divergence. In fact, what we did is we confirmed that weakness in the NYSE. We confirmed that weakness not only in the NYSE, but we also confirmed that weakness on strong volume as we took out those lows. So this to me suggests that the selling pressure is not over. Remember, the NYSE contains a lot of preferred stocks, which are blue chips, number one, preferred stocks, dividend yield stocks. It also contains a lot of bond funds. And the interesting aspect is on the way up, the market gave us a stronger sense of the marketplace because bonds were rallying. And now, as the stock market fell, the bond fund segment of the NYSE did not influence this and keep it from making newer lows. So therefore, the stocks that are within the NYSE overrode, the liquidation in the stocks overrode the component of the bond funds that went up, and therefore this suggests more weakening or at least a retest of last week's lows. Now, as we've pointed out, as far as the Russell's concerned, interesting aspect is that it did take out the lows as well. And if you can just see that I don't need to tee this up a whole lot. You can just see that not only did we cross below a weekly moving average, but we took out the August lows. If you'll note here, we took out the April lows. We took out all the lows. I mean, you can go all the way back and take this shelf of old support resistance, and as you can clearly see, not only did we break below those lows, but what did we do, friends? We closed below those lows. We closed below those lows, and we did not form an equal and opposite. So it still shows that the marketplace is respecting the downtrend in the sense that we made lower highs and we made lower lows. Just because we had a pause does not mean yippee-i-o-ki-yay, the party is back to let's get aggressively long. by any stretch of the imagination, we don't get aggressively long. In fact, in the Russell, we see periods where in October we see a little bit of upside in the market. We come into November and we come back and see a seasonal bottom. The annual low is actually towards the end of November, and then it's off to the races. So I'm actually hoping to see more chop and slop in the market, and to watch this on a weekly basis. After all, you have until November 22nd. Now let's face facts. It is now October 19th. That's exactly 4 more weeks. Can you imagine if we have 4 more weeks of tiresome volatility, 4 more weeks of tiresome rallies not holding? How many people will come out and claim that it's a bear market, etc., etc., and from peak to maybe trough over time? And that's what I tried to share with you folks, is that over time you will develop a weary bull, and the bears will get a little overconfident. So I believe that we are going to, as we are starting to see nibbling coming into the Russell, we're starting to see that segment of the market where we're seeing growth stocks outperform. In just last week, in fact, to prove a point, if we take a look at the S&Ps, down 1%, the Dow down about 1%, the Q's down 1.5%, the NASDAQ Composite down 0.5%, New York Stock Exchange down 0.5%, with the Russell up 2.62% on week-to-week basis. So when we take a look at transportation, up 3.5%. Well, if you make a widget, you got to ship the widget. So transportation, now that could be part components of just dissecting what sectors are doing well. Airlines got a little beat up. We can talk about that in a minute. But rails and trucking is doing well, especially domestic. Not a lot of exposure rails to, the only exposure rails have to foreign German weakness, or European weakness more importantly, is if they make something, they ship it overseas here, it gets loaded onto a rail and it gets shipped out to the West Coast. So therefore you will have some weakness. But remember, this is the time of year where we get something called the United States grain harvest. And there is one thing that we absolutely export. Besides our technology, besides capitalism, besides democracy, we try to impose our way and help other countries develop, and that's what we do. And in addition, the CME, if you don't believe me, look at where the CME's gone and look at where ICE is. I mean, they now have controlling interest in what? The Shanghai Commodity Exchange. So the U.S. is all over the world, but the one thing we absolutely export, we don't export textiles, we don't export making sneakers here, but we do export grain. And we put that grain, if not on a truck, we put that grain on rails. And so we are going to see an increase in rail traffic. So that's one of at least from a transportation sector, if you think about it, where we could start to see the strength in the market. So on a week-to-week basis, you can see industrials, as I point out, even on our weekly sheets. If you take a look at the weekly sheets real quick with me, everyone can download that. I have uploaded it, and you can get that right there in the document tab. So more or less, if you go over here and you start to see October seasonal trends, and it denotes mid-month. Well, it's mid-month, and lo and behold, industrials and materials and even financials and even utilities start, and all of these sectors start to, and if you think about it, it's kind of like the harvest lows, and we start to ship stuff out. So we start to see these products and commodities start to show signs of strength. All right. Now, if you take a look at the board here, interesting. This mid-month seasonal strength confirms the utilities were up a little bit, the industrials were up a little bit, and the materials were up a little bit. So basically, we're conforming to some of these sectors right before your very eyes with what is on the board and what does remain weak. Well, when we take a look at the financials as measured by the XLF, it was down 1%. But when we take a look at the KRE, which is the regional bank ETF, up a little bit. When we look at the where did I want to go with that? Transportation stocks, some of those stocks up. I mean, wow, the Nasdaq, even the Nasdaq transportation up almost 4.5%. So transportation stocks looking good. Regional banks starting to come into play, and so from a week-to-week basis, there was a really confirming evidence that there is some sector rotation, lightly nibbling, and funds, remember, they don't go all in. They start getting into the entire sector. They do it by certain stocks, and they do it over time. And that way it kind of hides how they're getting into trades. So when I look at the Russell, I say, hey, it's starting. It had a topping process, and it hasn't really begun the bottoming process on a longer term basis. But as we start to test these lows again, if they do hold, guess what? It will be the bottoming process. Now, looking at the NASDAQ 100, which I've showed everybody, it is not a pure technology play. It is in fact more biotech as well. And if we take a look at this, it is like, wow, what a nice sell-off in the market on a weekly basis. And we absolutely have bullish convergence developing. It's not confirmed, but we have bullish convergence in the sense that we have lower lows on price, higher lows in the AD line. And again, the volume, it was pretty significant on the volume on the downside. Once again, let me remind you that analysis, it's been that way all year, even in this segment of the market where we made really lower lows with the volume, even back in April, but it wasn't confirmed by the advanced decline analysis. And we have the same situation. We've taken out the prior August lows, but in volume, but not with breadth. So that tells me that don't be throwing out babies and bathwaters, but there is going to be potential retests of those lows. It's not the time to buy breakouts by any stretch of the imagination. So the market needs time to most likely digest, and that's one of the techniques that we talk about after big sell-offs, and that's even looking at day trading aspects. After major declines in the market, you get a departure from the means and you leave these gaps, as I've taught and written about, and the gap method, right? And so we get this gap between price and moving average. It's one of the first things that I've ever taught any trader, and been doing that for a long time, is to watch between moving average and price. And when you get departed too far from the mean, you need one or two things to happen. You need the price to swing back up to the moving average, or you need time for the moving averages to get back down to price. Time and price. That's why we have two axes, X and Y, on your charts. This is time, and again, this would be price. So price over time, it's going to take exactly just that. Now, typically on or about the 11th of October, we get bottoms, but this is not a typical year, and we do not have a definitive buy signal. So for me, I believe we have a chance to chop and slop. I am aware that we need, at least with the S&P 500, unlike the Russell, we never closed underneath that April low. But if we close underneath that April low, in fact, we have divergence, as I pointed out, from the August lows. But if we close the AD line on a weekly basis underneath that AD line, folks, that's not very bullish. That's all I got to say. All right. Now, we are developing a monthly sell signal. So here's what my thoughts are. I just said that going into November, we've got an election coming up. There's more time to chop and slop around. Unless we get this monthly chart by the end of the month, and today's the 20th, and we get back above the moving averages and this monthly PPS sell signal disappears, I think we got that kind of thing coming, where the market gets back up into November, it makes a low, and then December we shoot back up again. So right after the elections, wouldn't that give us how many weeks? 6 to 8 weeks from peak to trough. So we're approximately 11 days, 2 weeks out from November. November, we could see the first week of November make a bottom and then go up. And if you think about it, last week was exhausting. What would 2 more weeks of not going up, chopping and slopping, analysts calling for the highs, and people puking their long positions out? I think that's the setup I want to warn you about. And I wrote about this, and I said a 4 to 6, if this is going to turn into a more meaningful correction over time within, say, the next 6 to 8 weeks. And folks, that's what I think the market is setting itself up for, okay? So no, I am not as bearish as I was in September, and I am looking at dabbling in the long side of the markets, but I think it's a two-sided trade. Rallies are going to be sold as they showed last night, and I just want you to be kind of aware of that. So in summary, looking at the advanced decline, I still see time and price correction occurring. I don't think that we're going to crash to zero in the stock market, not unless we get complete devastation and destruction and more downside in these advanced decline readings in every stock sector. It's kind of like day trading. When we have the day trading page up and I've got the ES, the NASDAQ, the YM, and the Russell up, when they all generate sell signals all at the same time, you have a more higher probability sell signal to take, knowing that it's more of a broad-based trading signal. Now, the same can be said with the advanced decline. The same can be said with the overall stock indices. When they all start going down and they all start demonstrating weakness, then there is no more sector rotation, is there? It's just sell anything and everything you own. It's the end of the world as we know it today, as was sung by REM. It's the end of the world. In the end of the stock market world, I don't think that's the case, but I do see more chop and slop over the next few weeks, which means we're going to be liquidating Q puts by the end of the week if we come back and test those lows, right? That's what I will be doing, number one, unless by the end of the week I see more declines in that advanced decline analysis. I think, looking, just to be honest with you guys, the longer term outlook is not, if you take a look at the monthly, we're still above longer term monthly AD moving average lines. And if I can, and I want to go back here to demonstrate something, you know, when we had this great crash back here, let me tee this up for you. We had a couple things that occurred. Genesis didn't, I needed it. Well, if you can believe me on this one, whether you believe it or not, but there was a moving average. The market was below the moving averages back in 2007 on the monthly basis. And so we have seen at this point in time, there was, I apologize for not having that on this computer, but it did exist, and I hope I can show it back over. No, I can't. They didn't give me enough of the data on this computer. So at the very least, you can see from a sense of divergence when the market's going up, even the on-balance volume was showing divergence. Now, the funny thing is, a lot of times the on-balance volume will look similar to the advanced decline, but in this case, I can't prove that to you. I hope you take my word for it. The moral of the story is that we had longer-term monthly turns in the market, and this was a top that took a long time to form. You started to see major destructions, and then the market came up over time. You started to see more weakness over time before the major crash came. And this market, even if this is the high, which I don't think it is, we just don't have the same makeup on any time frame, monthly or weekly, to demonstrate that the high is in, because look, you don't even have a lower low in the AD lines. And if this is a week, guess how many weeks we got to wait to pay attention to that? At least another couple weeks. So anyway, I just wanted to share with you, these are the reasons why I'm not insanely bearish in the market right now, but I do believe we have more time to the downside, and it's two-sided trading. What does that mean? Day traders, be alert, be alive, be awake. I think rallies will be continued to be sold up against the weekly moving averages. So I want everyone to pay attention to the weekly moving average, number one. Number two, on a daily outlook, the cash market generated, the cash market spiders generated a daily buy signal on Friday with a doji, though. Did the same thing in here. The Russell generated a daily buy signal, but what happened Friday is it came off those highs. Daily buy signal, daily buy signal. Well, that's great, but we need to see what? Weekly buy signals. So I'm not really a bull in the market unless we get a close above. Maybe we get a trend line break. Perhaps we get a last conditional change. And if you noted that even in the spiders, this is the last conditional change, and we need to get a close over that high and both moving averages, and that isn't until way up in here. And that, if we get a close over there above that level, we most likely will start getting a flash of a weekly buy. I get more aggressive long when we go back into weekly buy signals, if that makes sense to everybody. This week we have a lot going on, believe it or not. Not in the sense of a lot of reports or Fed speakers. We do. Today we've got Jerome Powell speaking, Dan Tarullo speaking. On one hand, they say we're reducing and it's the end of quantitative easing, and on the next we get guys that are saying we might need quantitative easing 4. It's like, talk about sending mixed messages from the Fed. They are speaking. There's too many of them speaking. There's too many of them. And now there's so much transparency, it's sending a lot of conflicting information. And that is, I don't think the Fed could ever get it right. I don't think the Fed will ever be loved. I don't think the Fed, even with Alan Greenspan, there were critics. There's always going to be critics. They're either talking not enough or too much. And right now we're at that pendulum swing where they're talking too much, it seems. So, with that said, towards the end of the week, Thursday, I think, existing home sales, that's important, but new home sales, that's what puts washers, dryers, appliances, construction, jobs together. New home sales is what puts jobs together. Existing home sales helps out the mortgage brokers, and the financials generate fees, but it's really new home sales, that's the logic that creates the jobs. The industry could do so well by creating, as we talked about when I got back from Denver, you remember this? I said, hey, there's more apartment buildings up, not only here in West Palm, in Fort Lauderdale, but in Denver and Chicago. There's more construction of condos, or not condos, but apartment complexes, because people can't get loans. So I guess things could change since President Obama, his credit card got rejected. Since what's his name got Ben Bernanke supposedly couldn't get a refi. Things will probably change on Capitol Hill, and it's an election, and now we're hearing about it. Anyway, for this week, we're going to, just like we did, it's a little too late, but BTU had earnings this morning. We've got Rambus, Chipotle Mexican Grill, Apple after the close, and I think everyone will be looking at what Apple does after the close. If you can't get the iPhone, then they didn't sell it, and so last quarter doesn't look good, and of course they're going to come out and say, we expect a banner, we've got pre-sales, more people have surveyed that want the iWatch, etc., etc., so they're not going to, and they're probably going to say their tablets increased, and maybe they sold a couple extra computers along the way. I don't think that they're going to have bad guidance. If they do, it's a break. I would buy Apple near 92 to 88, and I don't know if we'll even get there, but I'll watch that. This week, I'm going to take a look at, I think Yahoo would be a good expectation. Cree is one that's not been on anyone's mind for a while, the LED, semi-space. There's some gold in them there hills of these earnings coming out this week, folks. And I think just like last week, we got really nice analysis. Yelp is another one. O'Reilly Automotive is another one. Some of them we could do all the analysis we want, and they just don't have great options. But last week, man, we just nailed it with QLogic, and I did a huge huge analysis here in the room. It was, I mean, I wish I could do that every hour, every day, and keep you guys as active as possible with nothing but outstanding market analysis. I don't want to toot my horn too loud because, as you know, the markets or Mary will humble me quickly. So the moral of the story is that the analysis that we did, that I shared with you guys, looking at the volume indicators, everything else, and I even said I don't even know what this company does. I forgot. I don't know if QLogic made mouses or if that's the other guy. And one of you in the room even told me what the heck the company did. I told you what I liked. I went down and did an option chain analysis. We saw unusual options volume in the January 10 strike. The weeklies, it looked like someone was selling the weeklies and buying the Jans, and they popped up. We paid 45 working limit orders, sold half or 2/3, excuse me, of mine at 80, and then I did get filled at 135. So I'm a happy camper on the Jan 10 calls on QLogic. I'm flat. I'm out. I'll look for another trade, and that's where we stand right now. So another one was looking at, of course, the IWM, the Russell calls, and put that out. I go through, and even with BTU, and looking at the unusual activity of volume in the January of 2016. Now, here's a funny thing. A lot of software, because of the data, when you're scanning for unusual volume activity, they don't scan for every single contract month. That's the funny thing, and it can be masked by no volume in the nearby months, but they buy longer duration out month options. This is another thing I want to share with you. So a lot of people that scan for unusual volume activity, it's not that they're scanning, and they can't possibly scan for every single month, every single strike on the board. It's just too much data. So if you have an average volume over time, but then all of a sudden there's no volume in the close months, but it's all in the back months, that won't show up in a scan. It's not unusual volume. We've done that actually by doing it by looking for opportunities that pop up on our PPS price indicators, volume indicators, and then we go out in time and we explore, and that is one thing that I think is really neat. Please don't share that technique with the world. I would appreciate it. So in any event, we've had some incredible trades this past month and a half. Again, I hope, just in summary, that all of you guys have seen an improvement and a positive P&L, and so we get ready for the holidays. In the meantime, I think that we still have two-sided trading in the market, number one, and we need to watch the AD lines on a daily basis, and more importantly, I think sometime this week we see, if the market does see any type of strength, we're going to see choppiness over time, and that opinion will change under two circumstances. All of a sudden the week just shoots straight up and we generate weekly buy signals, and then I'm going to say, hey guys, we're back to finally being bullish, and then we buy breaks. But right now it's a two-sided trade market. I hope you find that information useful. I went through A to Z this week. You have your reports and events, everything that's coming out. You have your earnings that are coming out. And again, I still like, for example, I still like Twitter longer term. And I will give you a listing of stocks for this week or as every day progresses, and some more options strategies for the week as we hit a bulk of earnings season. So with that said, everyone that's watching the recording, thank you very much. Look for some tweets. If you do not have or understand about the Twitter, may I take a quick second to share with you on the website one more time where to find it. If you go to personsplanet.com and you click under the Twitter logo right there, or go under tweets and go to under follow, you just click on follow. You'll get a window that pops up, and then you'll sign in to follow the account. So you need to fill out that information, and then you can get those tweets. Apparently we have a lot of other people feel comfortable in following me. It's 36,458 tweeters following me, and I'm following a few others, 132, like my good friends over at, I think, Frank Walsh and a few others, and I guess you can always find out who I follow. and why. So with that said, it's pretty transparent, and as you can see, we definitely have put out some before the fact information, unlike I think a lot of people look at doing it after the fact, like, gee, the market just crashed and wasn't that fun. We put in actually a lot of, I think, tradable information, and so I want you guys that if you, I do that because some of you hear me in the morning, you leave, and I tweet it because it's something we've discussed in the room, and I send that information out for you. That's how you find and sign up for the Twitter account and get those alerts via Twitter. Eventually, we'll figure out how to get them with timing in the markets and movement on an email alert service if we expand into that. But again, the trading room, once again, is to follow up on Trading Triggers University students, and that's what it was designed for. Many of you had also signed up as a special for our summer mentoring class, and that's where we are at. So with that said, I want to wish everyone a great week, and we'll begin looking at the markets here. The Russell, from a daily perspective, blue is above gold. From a day trading perspective, let's take a look. Every stock index has a daily bullish outlook. Okay, in the essence or in the spirit of looking at Person's pivots. Okay, so in Person's pivots, looking at, as soon as this tees itself up, there we go. All right, so in looking at a couple things here, as you can see, the top chart, and we'll change this over to our day trading page on the other computer in just a minute, but in looking at a few setups for you guys. All right, so the 60 minutes only, the Russell is in a 60-minute or forming a potential. It's got to conclude at the end of the hour, and that's in an approximately 21 and 10 seconds. 21 minutes and 7 seconds that this is going to need to generate a buy signal. Now, the Russell, just taking buy signals just based on the Russell, if we get above the daily pivot, if you close above the daily pivot, if you close above that equal and opposite, you need to close above that area. Then I believe you got a re-challenge of about another 15 handles. Note that today, interesting, we have lower high and higher low. So it's anticipating the Russell to form an inside day. When we look at the Dow, interesting, the Dow has a projected Person's pivot of a higher high and a higher low. And the problem here is we don't want to take buy signals in the Dow unless it proves it's bullish. For me, it needs to get above this last conditional change candles high, which is right here. Now I'm going to make this annotation here, and then I'm going to publish the chart for you folks that have the Genesis. For the NASDAQ to get bullish, it's really, if you take a look at the resistance all day, it was near R1. It is actually need to get above this swing high. Number one, we need to generate that and complete that buy signal and see the market over time. But if you're going to look for a buy breakout, doesn't it make sense from a technical perspective that you want to be a buyer above the typical price in the pivot? And then what's the upside target? The upside target would be testing yesterday's highs. And also remember, we have a weekly moving average above the market that will act as resistance, which is a little bit further ahead. So looking at this market here, you'd say to yourself, well, why don't you take a short-term buy signal? Mark, you've been talking, the market's gone from 76 to 83. Well, because the market was trading at 93 last night and went to 76. So there's something here for everyone. Wait for the right setup. Don't get trapped or caught in buying a quick little move unless that's your game. If you like day trading and trading lots of times. Remember, the more you're in the market, the more you're exposed to risk. People tend to forget that. I think that if we are going to see a more meaningful breakout, sustainable rally, right, you need to get above the weekly moving averages. So let me go over here and point out to you what the weekly moving average is. Interestingly enough, in the S&Ps, it's got a long ways to go. First off, we got to take out last week's high. Don't forget what last week's high was, 1906. So the market still has lower highs instilled, and this could be just trapping people to get long. If you are going to get long, wait for confirmation, wait for a trend to develop, or my better setup would be to see how the market reacts near Friday's, between Friday's high and last week's high, and then look for sell signals, because I still feel it's a two-sided trade. Rallies are still going to be sold. End of story. So, short term, get back to a 60-minute chart. Short term, if the market is going to have any type of a breakout, it's got to take out that high. Other than that, we need to give you a reason to get long. Look at the 60 minutes, even in the Dow, you're still below the 60-minute moving averages. Just because we've got an alert that there's a buy signal does not mean that we have an official buy signal. It's not going to conclude for a few more minutes. And that would be all the way into the 10 a.m. time frame. So, any event, I hope that information finds you well. Gold options expired, worthless. The one bad trade we had was a credit call, not a credit call spread, a vertical debit spread, 124, 126, and I bought the 126s back thinking we would get a better shot of rallying to 124, and no could do. So, not all trades win around here, but it was a very small calculated risk, and we'll go back to the drawing board. Looking at crude oil, everything is kind of interconnected, as you can see here. Crude on a daily pivot analysis, blue is above gold, but I'm not going to be a buyer of crude oil unless we take out some swing highs and you're above the pivot. Right now, look at crude oil. What has it done? It's made lower highs and lower lows. So I either want to see a switch to higher highs and higher lows, and the first swing high, we need to take that bad guy out right there. That little shooting star up there, we need to take out that high, and then you need to take out, more importantly, address the high that we had at 3 a.m. And if you can do that, then you start to prove to me that the market's making what? A higher high. But as it is right now, either we come down and test this low in here, or you got to give me a buy signal, or you got to give me a reason to get long, and I need a trend line break, I need a buy signal, I need some reason to get long, because in overnight action, these were definitive trends. There was some good trading volumes in the European session, and then all of a sudden we come in this morning, look at that big time downside volume. That does not show me a lot of conviction that people want to maintain buying crude oil up here. So if I'm going to be a buyer of crude, guess what? I need to see higher highs, higher lows. It's tough to sell support. So it's at a point where you don't have a major advantage of getting on the short side, because if you even take out that low, look what you got. Support here, and then you got support down there. It could be a very short-lived decline in the market. So first thing Monday morning, not a lot of definitive buy or sell signals, just someone that needs to buy or someone that needs to sell, and those are generally people that are, someone that has cash and they got to get into the market, or someone that has no cash and they got to get out of the market. I mean, that's really it. But no one wakes up on a Monday saying, I need to get into the market. People say, unless you want to just trade the market, you have to have breakouts. You have, for day trading purposes, you got to let momentum guide you, and that's the difference between analyzing trends of the market, analyzing trades, versus day trading. Okay, and I've always stated, sometimes my longer term outlook interferes with my short term, and vice. So if I'm longer term bearish, we can take a day trade set up to go long, right? If you're longer term bearish, there's no rhyme or reason. If I'm starting to establish longer term buys, I can take rallies to day trade the short side. So day trading sometimes does not mix with your longer term analysis. If you understand, hopefully I made that thought process perfectly clear. That concludes this morning's session. Thank you all very much, and we will now load that page up. As you can see, for those that have Genesis, I'm going to now just go to publish this, JP Trading Room, publish, so that you have those little points of interest on your 60-minute charts, and that you guys will have that on for crude oil and the rest of the remaining market. So we did publish that, and so now you can go back and load that. All right, thank you all very much.